Today is Tuesday, December 31st, and this is the ADM Investor Services Year in Review and 2020 Outlook. Today's guests are Alan Bush, Senior Financial Economist here at ADM, and Steve Freed, Vice President of Grain Research. Alan, what was the dominant fundamental for the financial futures markets in 2019, and what will likely be the most important fundamental in 2020?
Well, the dominant fundamental this year is the low interest rate environment. But in fact, that was probably the dominant influence over the last 10 years, with interest rates very low in that period. So I think it's only logical that that would follow through into next year, where this low interest rate environment tends to dominate financial markets again.
Industrial commodities such as copper, crude, and lumber languished in most of 2019, except for the last few months of the year where there were some strong gains. What is the outlook for the industrial commodities going into 2020?
Well, I believe that the outlook is bullish, and it appears that the global economy is stabilizing, and I think that will precipitate renewed demand for the industrial commodities, and that would be the copper, crude oil, and lumber, to name a few. So good gains late this year in those markets, and I believe in January we will see follow-through strength.
And gold and silver futures advanced in 2019 due to the bullish influence of central banks lowering interest rates and adding accommodation in various forms. What was the outlook for the precious metals next year?
I think there will be follow-through gains as well. There have been some big chart breakouts in both the gold and the silver in the last week or so. It also looks like central banks, I believe, will continue to be big buyers of gold, as they have been this year in 2018. So the trend is still higher, and I think it's commodity price inflation, especially the industrial commodities, that will cause the precious metals to continue their advance.
And Steve, what were the dominant fundamentals for the grain futures markets in 2019, and what will likely be the most important fundamentals in 2020?
For the grains, I think the number one story in 2019 was the weather, and it always tends to dominate trade in any given year. The number one event obviously was the trade war and the deal. As we understand this morning, the deal will be signed at the White House on January 15th. There'll be a 30-day implementation period in which after that time China will start buying U.S. ag goods. The Chinese have said they're not going to drop their retaliatory tariffs. They're only going to give waivers to certain things that they want to buy so they can control what's being bought. The list includes 34 million tons of beans, 5 million tons of sorghum, 5 million tons of DDGs, 5.5 million tons of corn, 4.5 million tons of wheat, 2 million tons of ethanol, 2.5 million tons of cotton, 2 million tons of dairy products, 1.6 million tons of broiler, $1 billion of U.S. beef, and $600 million of rice. Now, the market thinks that they really don't need that, and so it'll be interesting to see if they come in and buy it and when and how much. For the corn market, we're kind of dragging along the bottom of price range because there's too much supply. Wheat's rallied because of the, I think, some funds buying technically, and it could be near a top.
What is the managed funds net grain and oilseed position as we head into the new year?
In the soybeans, they're net short 69,000 beans. In meal, they're short 33,000 wheat. In oil, they're long a record 109,000 contracts of soybean oil. They're short 101,000 contracts of corn, and they right now are long about 25,000 tons of Chicago wheat. And I believe that they will cover the short positions once the deal is signed and once China starts buying.
Will futures rally because of the new U.S. and China trade deal, and what should farmers do on a rally?
Yes, I think we rally. Right now you got March beans at $9.50, and I think we rally over $10, and at that price they should sell cash beans both in the inventory and also for the 2020 crop. I think that right now you're looking at South America having a record soybean crop, which will eventually weigh on the beans, and farmers are talking about increasing bean acres in 2020. For meal, we're at $306 a ton nearby March meal. I think that it's going to struggle to rally along with beans, and eventually meal will trade lower. There's just too much supply in the world, and African swine fever has reduced the demand for protein. In the oil side, well, we really rallied a lot in soybean oil, almost 35 cents a pound. I think that we're near the top. We've rallied because of higher palm oil prices, lower palm oil supplies, and record imports of China demand. But I think once South American crops get on and start producing more vegetable oil, prices should be near a top. The corn market, I think we can rally to 420 on the March, and then I think the farmers should sell it at that price, both inventory and 2020 crops. Farmers are going to plant a record amount of corn in 2020 in the U.S. And in wheat, 555 is a good price for farmers to sell, and we understand last week hard wheat, spring wheat farmers in the Northern Plains sold a record amount of wheat last week.
And speculators, should they chase a deal rally?
I don't think so. I mean, I think this is a one-hit wonder, and I think that once we hit a certain price level, maybe a little bit over $10 beans, 420 corn, maybe 560 on the wheat, then I think, assuming normal weather in 2020, that would be a good place to start establishing short positions.
Thank you both. Please remember that the opinions expressed here today are solely the opinions of guests and are not necessarily the opinions of Archer Financial Services, ADM Investor Services, or Archer Daniels Midland Company. If you have questions or comments or would like to know more about our services, please contact us at www.admis.com.